What's up YouTube, it's Louis here, hope you're all well. We're taking a look at Bitcoin on the weekly time frame. The weekly close from last week over here signaled to us that we're going to get pulled towards this magnet, which is the 200 and the 55 weekly moving averages. And so as long as we're above the 20 over here, which is the purple one, we should continue to this. And so then after this week, we should continue on to that target. So as you can see, we're still not touching there. So the expectation is to continue to that target unless we're being shown otherwise on the lower time frames. But for the outlook, the outlook over the week should be that we are coming into this key area of resistance between 24 to about 25k. So that's the weekly time frame. Hope you guys enjoyed that so far. Let's head over to the daily time frame right now. So of course we swooped the high of the FTX capitulation over here, and we were focused on this daily time frame area over the last week because we were trapped within this range high set on Saturday, and we were waiting for daily candle closes above this 21,300 area. And on Friday right here we actually did so. Can you see that? So massive pump into the next key resistance, which is what we were saying anyway. So it's very nice to see that basically we've been preparing for different scenarios, but when one has been taken, we know, okay, this should be the target, the next target. And that was this right shoulder over here. We said that if we ever get through this, we're expecting 23k, 22.8k. And then the next target, I think we had some fib targets. Let me see if it was somewhere from here. No, to be honest guys, I've forgotten where I had the other oh no, it's this Fibonacci, wasn't it? There we go, here we go. So can you see the 786, also 22,735, also lining up with that right shoulder. So this is what's stopping us from reaching this target over here, which is the high of the range. But as we scale back to the weekly time frame, we can see that's lining up nicely with the 200. And yeah, if we're coming towards this, yeah, the 55 is going to get closer. What we're trying to do is invalidate this bearish cross. You can actually see that they were both downtrending, and it looks like they're trying to level off now. So the only way you start leveling them off and flipping them to face upwards, so something like this where we form the EMA repel, the only way to do this is if we now climb above. So it could be that, of course, we're expecting this all to be resistance, but if you want the moving averages to invalidate a bearish cross, we need an EMA repel to happen. And for that to happen, you need a slingshot motion. So we need to get actually back above that. So it could be that we are running towards 27 and 27 to 29k to actually get above it and then confirm its support, rather than holding its resistance. Of course, I don't know. No one knows. But this is the most likely path if you want to invalidate the bearish cross. We need to actually sling ourselves back above the moving averages and confirm them as support to continue on higher. I'm going to show you a fresh chart today, but we have been saying for a good while, even before this dump off, we were anticipating when we get up here, we're going to get rejected. But let's look at some other things that might lead us believing that it might not get rejected. I mean, it is some sort of support and it should be expected to be resistance, at least in the short term. But will it bring a longer term lower low? Or will it bring a higher low and continuation? Will it do nothing and we just burst through it and flip it into support? This is what we will be looking at in today's video. But I hope so far you are finding value. So do please make sure to like, comment and subscribe to boost that algorithm. We're almost at 5k now, so that would of course be appreciated. So yeah, the right shoulder is still being played around with. If we zoom back into this area now, you can see no daily candle closes above at the moment, but it looks like we are trying to head higher today. So let's scale down to the lower time frames, like the 15-minute time frame. And in the chat, we were talking about discussing this potential head and shoulders pattern on the 15-minute time frame over the weekend. And you can see they actually validated the pattern by breaking underneath its neckline. So let's draw this a bit nicer, of course. So let's draw this neckline over here. Okay, so we've got some support, a little fake out before climbing back in and holding it, support, another fake out. yes, a good few fake outs. But this is the line that would have the a lot of touches, but you can of course have it like this, like drag it down a bit more. It's completely up to you. But you can see that currently we're struggling climbing back above this. Basically, if we do not want to continue down, we need to climb back above this. Simple as that. So with that line, it's a lot confusing, isn't it? So I don't really like using trend lines. I'd much rather use fibs and moving averages. So we can see that we're currently above the moving averages after forming a bullish cross. So on the 15-minute time frame, that's bullish, but you can see we're struggling to take out the high. So simply just wait for a consecutive 15-minute candle closes. So I would like us to see price above 22,963. You could even just wait for 15-minute candle closes above the psychological level, 23,000. And that is how you know we're heading at least back up to the 786. Hopefully we don't get hammered down from here, back under the golden pocket. What we would need to do is, of course, going forward, stay above this higher low. Losing this higher low would mean we're going to continue lower. So right over here, you see this higher low, all of this support, and even a wick down here, but the body's holding that previous level over here. Just can't lose this area, and so if we're remaining above that, we should get this continuation higher back up to the 1 fib level. Only if we're closing above the 1 fib level do we continue to these targets, but these would be your next targets, and an overextended targets up here, it can easily get up there. What you need to do is, again, not lose this low over here. So as we're pushing through to these levels, if we're dipping back down, you can't dip under this. So if, as long as we remain above this, price should actually continue all the way upwards. Of course, that's the 15-minute time frame. We need to see the confirmations on the higher time frame, so I will get rid of that. Again, need a daily candle close above that highest wick over here to 23,300. That's a daily candle close, not 15-minute, but daily candle close above that to continue to these targets. And remember, on the weekly time frame, if we go back to the weekly, that's those moving averages. So we've seen the weekly calling out for it. We're on the daily. We're just waiting for that daily candle close to be above 22,800, let's say, and that's going to signal a pump towards this. But only a daily candle close above that continues the pump to the high of the range. But of course, when we scale down to the lower time frames, we drew out our levels and we knew that we need to take out, let's say, 23,000 on the 15-minute time frame. So again, on the daily, if we want to continue to up here on the daily time frame, we need to close above 23,000 because this was our resistance of the range. We've already broken out of the resistance of the range on the 15-minute time frame. So we're now just finding support over here for the continuation. As long as we're above this, we should be good for the continuation. Losing this, we're not going up unless we're holding this and reclaiming this. So something like this. If we had an awful dump down to here, let's hold it, climb back up above this support, and then of course take out the high again, and then we should go up. So if of course we lose this, that's when we're actually starting to head down, and then of course that would be the head and shoulders target. Target could come as deep as this. It doesn't necessarily, but that's why there was lots of resistance. This was our weekly range, the range that lasted a week, last week essentially. So that's why you are actually allowed to come down to here. That's only if the bearish scenario happens. Remember, you could come down to here and still go up. So only once you're losing that low, and it's about 22,300. Only when you're losing 22,300 are we confirmed going down. But yeah, losing this would signal at least a dump to here. Then from here, might actually reclaim everything and continue up or go down. Just wait to see the reaction here. But we're not there at the moment. We're still above this. So the expectation now is let's close above this resistance and 23k on the 15-minute time frame to pump towards the range highs over here, 23,300, and only a daily candle close above that is going to signal this continuation to 25k, which again on the weekly time frame was where that magnet is essentially sitting on the 200 and the 55 moving average. Thank you guys for tuning in. Again, like, subscribe and comment. If you want me to teach you this, my course and my mentorship is currently discounted. You also get the community chat included. If you want to check out those channel memberships, do so as well, or send in a super thanks. That's all alright. Thank you guys.